What is actually happening in the Chilliwack real estate market? I think we can all agree that the last 2 years in the real estate market in Chilliwack have been crazy. In 2021, we saw those rapidly rising home values. They peaked in about February of 2022, and then they started coming down. They started correcting, and that was in large part driven by interest rates. Interest rates went up over 4% in less than a year. Along with that, we got all the headlines, we got all the crystal ball predictions of what was going to happen and what was happening. And now most recently, you have people talking about how the market is heating up again. It's warming up. People are getting out there and looking for homes again. Let's debunk everything that's been going on so that it makes sense for you. Now here's your March 2023 market update for Chilliwack and District. And to keep it simple, I'm going to break it down to 3 basic parts. First off, we're going to start with what's happened in the last year. Then we're going to look at what's happening right now. And then we're going to look at what it means for you. So when we're looking at year-over-year stats, that means this February versus last February, we're actually seeing that we have 50% fewer listings, we have 50% fewer sales, and prices are down about 20% for average and median sales price, down 20%. And we're also seeing that we have more inventory. So we're at 4.5 months of inventory now versus last February, we only had about 1.5 months. Now let's take a look at what's happening in the current market. You've probably heard people talking about how the market is heating up. They're seeing more buyers out there. Well, here's some stats to back that up. So there's been, from January, we had 120 sales. In February, we had almost 200 sales. Also, in that same time span from January to February, we saw days on market go from over 50 to down at 40. So there's been a huge change in the number of buyers that we've seen out in the market and the number of sales happening because of that. Now there's one number that we have not seen increase, which we really should be seeing increase in February, which is number of new listings. In January, we saw 410 new listings come to market. In February, we only saw 333. So we actually saw a decrease in new listings when typically we would expect to see an increase in the number of new listings. So here's my analysis on what we're seeing in the current market. So for the past year, we've had a lot of buyers that have been sitting on the sidelines. They've been sitting on the fence, watching the interest rates and seeing what was going to happen because it made them uncertain. They weren't sure what to expect, what was coming next. But now the interest rates have leveled off. A lot of those buyers are coming back into the market and looking for homes because they didn't stop being buyers. They just paused. They just took a break. Now they're getting back at it. But at the same time, we don't have the increase in the new sellers bringing their homes to market. So we're seeing this shortage of inventory while all these new buyers come to the market. And that's what's creating this heating up of the market that we're seeing. So you see more multiple offer scenarios, you're seeing more people showing up at open houses, more showings getting booked, just all this buyer activity, but there's not enough sellers or homes out there to satisfy that demand. So they're ending up in these multiple offer scenarios, not like multiple offer scenarios that we saw a year ago where they're bidding 50, 60, 70 over as much. That is still happening here and there, but it's more multiple offers that are happening in and around the asking price of the home. Let's take a look at what this means for you. First off, for buyers. So for buyers, obviously I can't promise you that we're at the bottom for prices, but what I can tell you is that when we look at the home price index, it appears to me that that graph is leveling off, that we may be trying to find a new bottom. So that's not a prediction of any sort for the future. That's just me telling you what we're seeing right now in the current market. Now for active listings, yes, we are seeing more than we were a year ago, but it's still low inventory. It doesn't seem like there's enough homes out there for all the buyers that are trying to find them. So you may find yourself in a multiple offer scenario. That could be a possibility again. Of course, stay within the bounds of what you're comfortable with and put your best offer forward. Now for sellers, let me tell you, I'm quite optimistic for sellers this spring, and that's because all these buyers have come out of the woodwork. So there's definitely a buyer for your home. If it's a nice home that's priced well and marketed well, there's a good chance you're gonna find a buyer in this spring market and maybe even end up in a multiple offer scenario. However, don't use that as an excuse to overprice your home because those overpriced homes are still sitting on the sidelines while the ones that are priced well are getting all the action. And now a new little segment here for investors. I'm gonna say, I get it. At these interest rates, it is hard to make the numbers number, but don't forget to keep thinking long-term because just because you buy a property today that is not breaking even or isn't cash flowing, it doesn't mean that it won't down the road. In 2, 3, 4 years, that property may very well start looking a lot more financially feasible. And really, the longer term you can think, the better. You want to be in 2033 looking back 10 years prior to now and being glad that you purchased the property at the price that you did. And that's a wrap on my March 2023 market update for Chilliwack and District. Make sure you head over to Instagram, find me there at jeremy.vanwoerden. I share a lot of helpful information there, also market information, and this information is all aimed at helping you make better decisions. So make sure you're following me. I'd love to connect with you there.